Hello, and welcome to 5 Minute Math. Today we are looking at the fourth grade concept of financial institutions. This is standard 4.10e in the great state of Texas, and we are using item number 31 of the 2023 released STAAR test. If you haven't done so already, please go ahead and take a moment to pause the video, work this problem out on your own, unpause it, and we will look at our answers together. All right, so which of these things will hold on to your money for you and also lend you money? Bank, school, a job, and a loan. Well, we don't have much to go on here. We need to know all of these vocabulary words before coming into this test because there's not going to be anything on our reference materials to help us out here. But let's see if we can figure out hold on to your money for you. All right, so keep your money. That's kind of an interesting idea here. Keep your money. And then lend you money. All right, so what is it when someone lends you money? Well, you borrow money, and sometimes they let you just borrow it for a certain amount. Sometimes they'll let you borrow it and they'll charge you something called interest, right? Because if someone just lends you money, they don't get anything out of it. But if they lend you money and then you pay them back a little bit of interest, that means you pay them back and they make a little money on top of it. And so that's kind of worth their while. All right, so we want someone to keep our money and then let us borrow money from them. Okay, so could it be a bank? Well, it could be a bank. You can deposit your money into a bank, right? And so when we deposit money, there's a few different things that we can invest in. Most of us will either have a checking account, right? So that's usually where we have like debit cards and checks, and if we have a job, we'll get our money directly deposited into a checking account. Money comes in and out, and basically they're just holding it for us. Now, sometimes we'll have a savings account, okay? And so a savings account, they hold on to your money for you, and they actually pay you a little bit of interest. So they pay you for the privilege of holding on to your money because you're not going to get a lot of money out of it. If you get money out of it too often, it turns into a checking account. And then sometimes you got other investments like you can buy CDs, right, certificates of deposit that are longer term investments. But there are quite a few things. So yeah, we can keep the money. And they also have some loans, right? So sometimes you can get a loan for your car, your house. So yeah, they definitely let you lend the money and they definitely can keep your money, right? So here's your keeping the money, and then here's your lending the money. So, okay, yeah, A is looking pretty good. Let's check the other three. So a school will hold on to your money and lend you money. No, a school's not going to do any of those. Maybe if it's a university, right? If it's a university or college, they will take your money uh, because it costs money to go to a university or college, but they won't give you any money because they're not in the money giving business. And even then, they take your money, but they don't keep it. They take it because it's a fee. So that's not going to work. A job will definitely give you money, but see that's the thing. They don't lend you money. A job gives you money because you earn it. Those are your wages. They won't hold on to your money. They give you money because you earn it. So it doesn't really let you keep money. It also doesn't lend because lend means you have to borrow it and pay it back. When a job gives you your paycheck, it's yours. You don't have to pay it back. So this one doesn't work for either one. And then a loan, that's exactly what this lending is. So a loan will definitely lend you money. That's what a loan is. They let you borrow money, you pay for something, and then you pay the person who gives you the loan back or the institution back, usually with a little bit of interest. But a loan does not hold on to your money for you. There's nothing there. It won't let you invest your money or keep your money. So, no, we went back to our very first answer was correct. A bank.